Good afternoon, everyone. Uh, let me uh, let me introduce Mr. Ayashkant, Kumar Ayashkant. He is currently associated as Group Chief Investment Officer at Wipro Enterprises. In his current role, he is responsible for managing the global corporate treasury, investment, hedging, trading in multiple currencies, commodities, financial planning, mergers and acquisition, venture fund, risk management, cash management, etc. Before joining Wipro, he was heading the treasury at L&T Financial Services. He has more than a decade-long experience in fundraising, both onshore and offshore, trading in forex derivatives, risk management, M&A, investor relationship, systems implementation, hedge accounting, and market-related activities. In his previous assignment, he was associated with ICICI Bank as well as PwC. So we welcome Mr. Kumar Ayashkant in the leadership lecture series of CIMP. Welcome, sir.
Thank you. Thanks, sir, for that introduction. Am I audible?
Yes, sir.
Sure. So just summarize what I do is I take care of the investments, and we also have a venture fund where we invest in the startup space. So the discussion what I'm going to do is more about give a perspective and landscape what is happening on the startup space. Is there is pain? Does it look good? If it goods, how good it is. If it's ugly, how ugly it is. So that's the broader contour of the discussion what I'm going to have. Fortunately or unfortunately, I do not have a presentation. So everything what I'm going to speak is going to be what we are seeing in the market. I'm going to do around it. Later on, I'll say whatever I'm going to discuss and broad presentations around it, because unfortunately, I'm not allowed to share my screen since I'm in my office. So with those limitations and the contours, you would start my discussion. Any further expectation you have, you want me to cover? Anything, sir?
That's fine, sir. I think your experience, knowledge in the field of investment, I think that will be, and what is happening in the market, that will be a value addition for our students. And we have both a mix of PGP1 who have recently joined and PGP2. So if it is in that way, I think it will be what we are going to share. I think it will be relevant for both PGP1 and PGP2. So I think it's okay. No
sure.
answer.
So look, before starting the startup story itself, I would like to make one statement where I will borrow a few words from Churchill, that it's not the beginning. Perhaps it's the beginning of an end, or it's in the beginning of a beginning. Now, if you look at it, why the startups are so popular today? Is it that, there were no ideas before, let's say if you go back 20 years or if you go back 15 years, or is it something, suddenly you see this lot of ideas, floating in the market? Why these ideas are coming? If you go back and you look at in the history, we had the story from 2000 till now. We can summarize it by calling it as a kayamat se kayamat tak, because we have seen a lot of stress scenarios. We have seen the Lehman crisis, we have seen the Fed unwinding, we have seen the subprime crisis, and then finally we have seen the pandemic. Now in US, which is roughly around closer to 21 trillion kind of economy and roughly controls 40 to 50% of the economy, that economy kept an interest rate virtually zero starting from 2008. And then they kept on expanding their balance sheet. So it's like, the entire world saves from US and the US keeps on spending for the rest of the world. Now, interest rates in 2008, when the Lehman crisis happened, what US did is that US started reducing the interest rate to zero, which is called as a zero interest rate policy. And zero interest rate policy is something which is not new. It has been there in Japan starting from 1990 onwards. But in addition to that, what US did was that US went for something called as quantitative easing. Like, I'm not only keeping the interest rate zero, but I'm also buying back assets. So the interest rate is going down. I'm incentivizing people to go ahead and spend it. And since 2008 till 2019, Fed technically did 3 quantitative easings. Quantitative easings means nothing but Fed is printing currency and buying bonds against that, buying assets against that to keep the interest rate low and then give that momentum which is required to bring that growth into the bank. Every time the Fed targets, Fed is nothing but the Reserve Bank of India kind of situation in bank in US, which is a central bank which regulates everything else. All put together till 2019, the Fed's balance sheet grew by roughly around $2 trillion. It was around 0.92. It went to closer to 2.5 trillion kind of till 2019. 2020, when we had the COVID year, the pandemic started hitting us. First time, Fed decided to go for a very, very rapid expansion because nobody knew what is there. It is fighting with an unknown risk. And so accordingly, you have to take very extraordinary measures. So Fed started printing a lot of currencies. So all three quantitative easings till 2019, what Fed had done, they went ahead and they did in mega, expansions where the 60% of the global dollars, whatever you see, were printed in the last 18 months. So every dollar that you are seeing, all the dollars which are available across the world, 60% of that have been printed in the last 18 to 24 months. That's point number one. Point number two, you haven't perennially kept the interest rate zero. Number three, what you did was, first time Fed started giving money to the end user. Previously, what used to happen when you're keeping your interest rate low, you're buying money, you are basically helping the supply side. So you are incentivizing the producer to produce more without creating the demand. And that's the precise reason Fed was never able to achieve a 2% inflation. Now, first time Fed started giving money to the end user, irrespective of somebody who are having a job or without having a job, people are giving lot of amount of money, roughly around $6,000 kind of money which you're giving. So this created a demand at the end cycle of it. So if I combine all 3 points, Fed printed roughly around 5 trillion kind of currency, kept the interest at zero, and the household savings went up significantly. So these are the 3 things which happened in US, which changed the landscape of the entire global economy. At the same time, all the global banks put together went for an printing of the currency, which is around $10 trillion, almost equal amount of the US. So this is an unprecedented liquidity which was put into the system, which was injected in the system. Now we can keep on arguing whether it is what defines fundamentals. Very clearly, liquidity will define fundamentals. Fundamentals will never ever define liquidity. To put this words into perspective, if we give a lot of money to a person and we say that if you keep this money in your bank account, you're going to get 0 rate of interest, what he's going to go do? And at the same time, he's not able to spend money. He's going to put money into the assets where the asset prices will be inflated. So that's what happened across the world. And you see an asset bubble being created, and everywhere the asset prices kind of kept on going up substantially. So this is what happened in a landscape basis. That's a point number one. Now, if you go back, today US debt to GDP is around roughly 125%. Is this the kind of debt to GDP what we have seen in the past for countries? Yes, we have seen this. We have seen this roughly for post World War II. There are around 53 countries were sitting this kind of debt to GDP. 52 defaulted, and only one country which survived is United States of America. And how could you survive? To simplify it, let's say you have got a house whose price is, let's say, 100, and you have taken a loan against that, which is, let's say, 100. Now your debt to loan is 100%. There is no way you can reduce your loan. But what you can do is that you can inflate the prices of your house. Imagine if your house prices goes to 200. Tomorrow the debt to loan will look around, debt to asset is going to look around 50%. So that's a precise game which kept on going. It's like you do not do anything, you inflate the prices so that automatically the debt to GDP kind of taken care by. So this is the broader things which happen. And this kind of allowed a lot of money to went into the riskier side of it. And this gave a rise of a lot of story of the startups. Now, startup is a buzzword, if you look at it, which became very popular post 2015 and 2016. But let me give you one hard data. Typically, the startup failure ratio in the world is around 99%. Only 1% of the startups which are being created, they survive post 1 year of existence or 2 years of existence. And then out of that 1%, again, 1% only become very successful, which became the unicorns or something like that. And then the entire world follows them. Now, if you just look at the 3 days, before data, in 2015-16, we were roughly around 700 startups. Today, we have got around 72,000 startups. Out of these 72,000 startups, which are only in India, how many are actually successful? Hardly 100 or 200. We have got this year around 36 unicorns. Let's say something would be 500 to 800 billion dollars, another 2030. So all put together, this comes around 100. So you can yourself do the calculation and you can see what is the success ratio of the startups. So it's not that with the starting point what I had, the ideas, there was never an issue of shortage of ideas. The ideas were always there, but only because liquidity was available. It was a cheap liquidity which was available. This defined the landscape of the startups in the last 5 or 6 years, which is a combination of various factors: interest rate being kept zero, pushing the liquidity into the system, and that defined this entire place of it. Now, this is the broader side what we saw, the story of the startups broader across the world. Now, what are the countries actually who played this game really well? So, by the way, India is not called as a startup hub. We have marketed it well. Actual startup hub in the world is Israel. Now, Israel is a very small country. What they do is that they have something called as the incubancy SPVs, where the government funds the idea. Government will, within private player, they will tie up, and government will put 75% of money, 25% will be funded by the private player. Then they will keep on funding these ideas. So essentially what you're doing is that you are promoting the startup culture in a much, much, much bigger way. Now, how this is going to help is that, let's say you're putting money into 10 startups. If one idea goes well, that itself is going to give a 100x return. So government is also recovering the money. At the same time, the private guys, government is not expert, but the private player who's managing that SPV or managing that fund, he has all the bandwidths, who can do a thorough analysis, who can do and look at the business landscape, who can define whether the business is going to be successful or not. All the due diligence, everything is carried by the by the private player. So that's the kind of model what Israel has been following it up since quite long, and that's a model which has been fairly successful. So Israel is kind of the startup hub with a very low population, which should be, let's say, closer to 1 crore today, which is 100th time of the population of India. Despite of that, they are able to create a lot of unicorns, a lot of good startups. So that's a very fundamental model of sustaining it. Now, South Korea, we have seen some startups coming and doing interruption there. So that's the broader side of it. Now, every startup, why do you need a startup? Startup is nothing but they are there to solve a problem. It's a problem statement. Like if I say, let's say General Motors. Why the General Motors? What is the biggest invention of General Motors? Any guesses for that? General Motors makes cars, right? That we know. What is the biggest invention of General Motors? Why they became so popular? Any guesses? Anybody would like to take a guess?
Sir, it builds engine.
Yes, it builds engine. So there are 100 companies which builds engine. But why General Motors become so popular? What is their biggest invention?
Sir, he was invented self-starter engine. Like before this, it was manually started engines.
No, it is not like that. So basically what General Motors did was, in the 90s, 20s and 30s, buying a car was completely unaffordable for a person. A person was not able to buy because the cost was very high. So what they started doing was that they said that you can finance your car. So basically to buy a car, they used to give a loan. So you can buy it in EMIs. So that was the biggest invention of the General Motors was. So basically they made the car affordable. That's how the people started buying cars. So cars became very popular. So a startup is nothing but an idea which reaches to a mass, which creates a demand for you. Like the classic example in the Indian scenario is that what people are not, it's no more a startup because it has grown already big. Let's say Geo. What is the biggest problem of Geo? Biggest problem statement of the Geo was all about. See, Geo, if you look at it, Jio's biggest problem was that they realized if they have to penetrate the Indian market, because Indian market has a large population, you need to give internet. Their call is based on the internet, right? So how can you make that affordable? You have to make the mobile phone affordable for everybody. That's the reason they worked with the OEMs to make the cost down. And then they made, the penetration higher. They make the availability of the mobile phones substantially, that they brought the prices low by working with OEMs, working with various companies, so that everybody can get to that model. You today, yes, the success of the fintech, what you see in India, let's say Paytm, let's say PayU Money, let's say Razor Pay, whatever you can name it. But everything is based on the internet, and internet penetration needed in mobile phone. So how can you bring in mobile phone? That has to be affordable. So that's the problem statement what they solve. So every startup for that matter has to solve something else. If there is no clear-cut goal how they are going to solve it, then the startup is going to be an issue, right? So these are the two things, on a broader startup side, what happened. Now coming precisely to the Indian startup space, what happened? See, India is called as a land of opportunities. At the same time, why it is a land of opportunities? Because we have a large population, we have a young population. Our private consumption to the GDP is around 56%. We are fourth largest economy in terms of purchasing power parity. So if I all add together, we have a young population who are willing to spend, and fortune can always be built only at the bottom of the pyramid. So since you have a huge mass, you can always create that. And number 2 point is that if you look at Indian GDP, it's around $3 trillion, and we have a population roughly 140 crore, which comes to an per capita GDP of roughly around 2000 US dollars. And if you take 15 M's out, the per capita GDP falls to around $800 million. Sorry, $800, not $1 million, just $800. And imagine in a family, there are 4 members. So one member is working. So per family's GDP per year comes to around $32,000. So in number perspective, 99.9999% of the Indian families on an average are making an income which is $32,000, which is $8,000, which comes roughly around closer to 3 lakh rupees, where monthly income is 25,000. So 99.99% of the Indian families are making a monthly income which is less than 25,000. With the economic growth happening, this income is expected to go up substantially. Like today, per capita is at 2,000, living 50 days at 800. Let's say living 50, if this 800 goes to 2,000 or 2,500, that's going to give a lot of boost to the economy itself, which will bring a lot of momentum to it. And with the young population, this economy is always going to grow. The resilience of the Indian economy is so strong that it will always give you the opportunities. Like today, if you look at it, Indian equity markets, it went down to 14,000, 15,000 level, and again it is back by around 10%. It is around 16,500 level. There is always demand which is available for the Indian side of it. And once you have a large customer base, what you can do is that you can use that base to cross-sell anything else. Like classic example is Amazon. Amazon started around as a bookstore, but from a bookstore, they got into till 2018, it became 2008, it was an online portal to they went into cloud services, and they started making money from there. So if I give a huge customer base, you can always create a model out of it. See, the biggest challenge for any company is customer acquisition. If you have a large customer base, it is very easy for you to do and cross-sell around it. And customer acquisition is a big issue for any company for that matter. May it be an established, may it be a startup. We saw a lot of mushrooming of the startups because of this fundamental liquidity thing. People started investing in a lot of startups, irrespective of looking at what the idea is. Because your cost of capital was virtually very, very low. So what happened, all these venture funds, we also run a venture fund where we invest in the startup space. The model used to be 3 years back, you invest money into 5 companies or 6 companies. Even if one company does well, it will give you 25x or 100x kind of return. It's like 6 companies you're putting 111 rupees, 5 goes off, and one company gives you 100 rupees. You still make 94 rupees profit. So it's you're absolutely fine with that. So anything you do, you'll do it. A large extent of that is in a listed space. In a listed space, it is very open because the price is kind of derived from the demand and supply. Unlike an unlisted space, which is highly unregulated, there are compliance related issues. What SEBI in India or ACC in US, which are coming with the stringent guidelines on the valuation part of it. So effectively, what you're doing is you can always do an moving from transferring and left hand to the right hand. Like as an investor, let's say we have invested in a company X, and there is one of my friend as an investor who have invested in a company Y. We can always exchange X with Y with a higher valuation. The valuation always keeps on going up. That's one thing which happened up to a large extent in the Indian side of it. Number two, because the cost of capital was so low, people always were happy to keep on putting money into it. Number three, when people saw huge success in this era of it, again, it is a herd mentality which kept on putting a lot of money into the startup space. And the startups, unfortunately, many startups got the money without having a very, very strong fundamental funding. How the startups actually act is that first you have to do an idea. Based on that idea, you raise money. That's called as seed capital or seed funding or angel investor, whatever you can call it. Then in the first or second round, you keep on getting the venture funds. Then in a slightly mature stage, when the establishes there, it goes for the private equity player. And the final stage, it gets listed. Now, if you look at the Indian scenario, most of the companies, may it be Zomato, may it be Paytm, these are the companies which went for listing. And if you closely look, what has happened? It is a change of hands. The shareholding change from the promoters to the retailers. And post that, both the examples what I gave it to you, if you look at it, they failed miserably because unlike in startup space, in a listed space, your bottom line is also important. It's like no more your revenue is important, but what is a PBT you are generating or the PAT you are generating? That's something plays a bigger role. Now let's take the example. Let's say Zomato. Zomato says they will take 18 years to create a positive cash flow. I mean, to make an operating margin positive, they need 18 years. And market has given that, 18 years time, they have got that cash to burn. But that's something as a model which analysts will start questioning. What if that 18 becomes 20? What if that 20 becomes 21? Essentially, then you are funding all of your losses to equity. Today, till 18 years, you have some amount of cash. But what happens post that? Now, Paytm, again, if you look at it as an thing, the share price was around 2,100 where it was listed. It came down to 400. It is stabilizing around 500 rupees because these are, listed information and you can get a lot of articles around it. Now, what happened? What essentially happened there? So if you look at Paytm, what is a business model fundamentally? So business model is very clear. They want to copy. They want to copy the market leaders. They wanted to be the wallet. They have lost that market substantially to other players. Let's say there is PhonePe, there is BharatPe, there is Google Pay. So there are a lot of people, they're not among the top 5. They wanted to copy the Amazon and the Flipkart by creating models like, a Paytm Mall, which again failed. Then they wanted to create a model called as like Zerodha we have for directly acclimatizing people with the securities market. They have something called as Paytm Money. Again, they're being beaten there. So the fundamental question is that what is a business model? How are you going to sustain? At least you have one unique proposition. Like Zomato, you can say that, okay, that's a perpetual behavioral change. Like today, if you speak to the tier 2 or the tier 3 cities, what is the kind of order a restaurant generates through Zomato or Swiggy for that matter? The answer would be 35 to 40%. That's a perennial change. Don't think this is for our generation. Think it like this is for our next generation. Are they going to visit the restaurants the way we are going? Probably the answer is no. They feel it, they can order it and they can get it. With the introduction of the cloud kitchens and everything else, the accessibility but often restaurants which is far away, it becomes much easier around it. So that's at least there is a business model. They're clear what they want to do. So they have a customer base. Number two, they're also adding value in terms of employment, because they're creating an employment out of it. A lot of youngsters are being employed. So that's it. At least there is a business model. Now, whether that business model will be successful or not, questionable. But the business model exists. But on the other case, the business model doesn't exist at all. So this supply of money gave rise to a lot of startups. I'll give you a classic example, which you can correlate. In state of Odisha, in 2000, there were roughly around 5 or 6 engineering colleges. There was a time. Now 2000, that IT boom happened. There was a lot of engineers which were required and which were observed in the IT companies, and that allowed to mushroom the engineering colleges. So roughly around today, there would be 100 plus engineering colleges in the state of Odisha, and that's more or less a story everywhere else. Because if there is a demand, and you see, somebody is getting employed, and there is an income attached with it, suddenly you see, a lot of your supplies would get channelized towards it. And that's what happened in the startup space. A lot of people started opening their startups, and that's the reason we have seen closer to 15,600% CAGR, compounded annual growth rate in terms of startup creation from 2016. And today, roughly, we are sitting in India at around 72,000 startups. So that's the broader number which gave this contour of this startup space around it. And we saw crazy valuation happening in the startups, because this is unregulated. People only look at your top line, how much sales you are happening, what is the kind of cash burn you are doing, that you don't know. So essentially, all the startups are, if you look at it, they are just burning cash. So if you're burning cash, you have this beautiful model called as Gordon's growth formula, and if you go there, you discount all these cash flows till 5 years or 6 years, and then you do a terminal growth rate, which is nothing but you take what is the terminal growth rate, and risk-free rate minus the terminal growth, you find what is a terminal value. So every startup expected to make losses for next 5 or 6 years. But post 6 years, it is expected only the valuation is going to come in the terminal value. So imagine a startup which is a zero coupon bond, where the entire cash flow is being put in the rear end. Whether that cash flow will see the end of the tunnel or not, questionable. Whether the value of the bond can be increased or decreased, it is possible. It can be done. Now that's fairly the lot of mushrooming of the startups happen. People started putting money, and at the same time, the other asset classes were giving lower return. And simultaneously, once this rally happened from 2020 March onwards, 21st March 2020, Indian Nifty was around 7,800 levels. Today it is around 16,000. So it has doubled. It went to 18,800. Now startup is nothing but an unlisted place with a higher risk. So if I have to map what would be the beta of the startups, they should be around 2 times or 3 times or 4 times. So any rise in the top line gave an stupendous growth to the startup valuation itself. And of course, there was fair bit of irregularities, fair bit of exchange of hands, which kept on happening, or the circular trading. So the regulation is not there. So this gave rise to a lot of startups being increased. But let me again come back to my first point. This is that 1% of the startups what you are seeing. You're not looking at as 99% of the startups which are failing. This is that 1% of the startups which are being marketed, which got the attentions. And people have this tendency to look at the bigger things and to miss the negative news in that. Like when it is we call that as a risk on situation. In a risk on situation, you have a tendency to miss the bad news. And in a risk off situation, you have a tendency to look at the good news. So you need to balance both the things. So people become very riskier. People kept on investing. That's gave rise to valuation out of it. Are all the startups bad? The answer is no. There are beautiful startups which are having very good, very very strong and robust models. Like one of the startups which made a company very popular is Nykaa. So Nykaa realized when a lady buys a product online, let's say Amazon or Flipkart, he's not very clear about what is the authenticity of that product. He has an shadow of doubt. She has a shadow of doubt when she is buying that. So Nykaa realized this very well, and they created a platform which gave a certificate of authenticity, and which gave that model. And for your information, Nykaa is not a cash burning. They're making actually profit. So the profit is small, but they're able to make that profit, and that they could create a beautiful model around it. And that's a model which is going to be sustainable. Valuation might come up or go down, but the model is robust, and they're going to capitalize around it. Now they're using that to sell everything. It's when you're buying from Nykaa, the person buys because it's a factor of trust. Flipkart, again, classic story. Flipkart allowed the tier 2 or the tier 3 cities where it was difficult for him to buy in mobile or buy something else. It made them possible that. So all these startup portals changed the behavioral pattern of the Indian people completely. Now here is my view, and this view is very personal. I believe any company who is going to bring the savings of the Indian consumers to the forefront, those are the startups which will be successful. And I'm very negative on the edtech side, like all these education companies which are big startups. Like I'm kind of negative on them, because I believe that's a model on a long term. It might not be sustainable, because with the opening of the schools, with the opening of things, people will keep on going to an offline class, like this presentation what we are doing, or this discussion what we are doing. If you ask me, the efficacy or the impact of this presentation would be substantially better if I go and I give it in person. So it will be easier for me to connect with all of you. Like if I'm able to connect today 50%, probably I'll be able to connect 75% with you. That can never be changed. So for that reason, all this edtechs, which there are a lot of news around it. So those companies, I think, will have difficulties in terms of the valuation what they're enjoying right now. So that's the broader concept of it, how the startup story went till, let's say, 2022 January. Post that, the other issue happened. Any question till now? Anything? You can feel free to ask anything else.
Good evening, sir.
Good
So
evening.
yes, it is audible.
Yeah, you're audible.
You are from the Bipro, and the Bipro share market is going down day by day. So can you elaborate about that? The event companies showing profit.
See, stock price is an expectation of how the company is going to behave. It's not what you're doing right now, rather in valuation of what you're going to do in the future, and you're discounting it back. That's how the analyst will look at it. So if you look at, let's say, Wipro Limited and what the data which came last week. So if you look at it, there is an compression in the operating margin by roughly around 21%. And that's the reason, that the companies are down. And it's more or less a phenomena for all IT companies. If you look at it, there is a pressure in terms of the cost management. The employee attrition rate has been high, and it's a known secret. It is available there in the public domain. That's point number one. And the replacement cost is happening at a higher pace. So I'm giving a generic answer. I'm not giving which specific to Wipro. I'm just giving a generic answer what is happening in the IT sector. That's point one. The cost of employee is going up. It is not a known secret, because attrition rate has been high. Number two, during the COVID times, everybody expected for automation. People will go for automation, so IT was in a boom. So now analysts are apprehensive whether that kind of growth momentum, like in your model, you have factored that the companies are going to give 15% growth in their revenue every year. Whether the 15% growth is going to happen or not, that becomes questionable. To answer your question slightly differently, let's look at Indian GDP data itself. So Indian GDP for this year, the beginning of the year, it was expected that Indian GDP will go around 7.5% for this financial year. Now today, RBI has come down up to 6.7%. Now 6.7% means you have to add the inflation to it. So nominal GDP growth, inflation is, let's say, 6.5%. So we are expected to go around 14.5, which is now going to be around 13%. So definitely the revenue of the companies are going to correct by 1.5%. And that's a broader picture for the globe itself. Now the globe is expected, just a moment. So the entire globe is expected to grow at 3.2% for calendar year 22, which used to be around 3.5%. So if the growth is slowed down, definitely the companies are going to make less amount of profit. So that's a broader correction which is happening. With respect to IT, it is definitely, one of the reason is the employee cost, and second is the expected growth projection model. That's a generic reason, and that's if you look at it, the broader IT sector, it has corrected for that reason.
Good evening, sir. I also have the same question. I want to ask about is FII or DIIs pulling from IT sector their money?
So FII, DIA, if you look at it, yes, they are pulling money from the Indian sector itself. Why IT sector? HDFC Bank has been hit very badly. So all the stocks for that reason, have corrected now. Nifty as a broader from 18,700 is back to 16,200. So 15% correction has happened. It went to 15,000. So which was around 20, closer to 22% kind of correction. But now it has bounced back by 10%. So yes, FIA and FPIs are pulling back money. But you need to look at one more thing. Today, the retail money, which is coming through the ELSS or SIP scheme to the equity schemes, is substantially higher. So, a lot of this money, what FII or DFIs are pulling, are going to be absorbed by the retail players. So, you don't need to panic. So, it's okay, PAs are pulling back money. And that's a broader concept, across the globe, what we have seen. But that will be filled by people like you, people like youngsters who are now willing to put their money into the equity market. So there is not much of risk.
Thank you, sir.
Sure. Okay. So any further questions around it?
Hello, sir.
Yeah.
This is Gaurav. So I wanted to ask that is it right to assume that startup bubble has been bursted in India, since many of the startups that listed are doing almost very bad?
See, Gaurav, any bubble has to burst at some point of time. Apart from gold. Gold is a bubble which has been there for the last 400 years. But if you look at gold, has given technically very low amount of return. It's used as a hedge against the inflation for nothing else. But the actual usability of gold is very low. So it's a yellow metal. And a lot of this demand is being derived by the central banks and, of course, the Indians. I don't know what is the affinity towards the yellow metal, but that's a bubble which has not busted. But every bubble at some point is expected to burst, or market will take the moves in such a way which will allow the asset prices to correct. You cannot continue it perpetually.
Thank you, sir.
Okay, so that's the broader story till 2022 January. Post 2022 January, what happened was, US, if you look at the household spendings, was before pre-COVID was around $430 billion. Since US gave a lot of money to this household people, irrespective of they are having job or not, so household savings went up. So once the economy opened, they started spending substantially. That 430 billion is now closer to 630 billion. So there is a month-on-month $200 billion additional spending by US. Now $200 billion means what? They are buying it, but there is a value chain, right? The multiplier effect, which is coming into play. So that 200 billion created a lot of demand across the globe. At the same time, what happened? We have a lot of geopolitical issues. February, you had this Russia and the Ukraine war. So Russia and Ukraine contribute around 15% of global freights, like the ships, what you see. So 15% of the ships are gone now. So you're now going to operate with the 85% ships. Now, if you type the global freight charges, there is a substantial rise in terms of the freight charges across the globe, because your operating cost has gone up, because Chinese due to the COVID, the labor availability was an issue. So freight charges have almost tripled. Then on top of that, what happened? The agro-based commodity prices, three of the major agro-producing nations, US, Canada, and Russia, they had kind of stopped their exports. Then agro prices also went up substantially across the globe. So this led to an inflation, which is not only a demand pull inflation, but it is also a supply constraint inflation. Supplies is also low, you have issues, and the demand continues to be what it is. So it's like the buyer is there to buy irrespective of whatever the price may be. Seller is there, of course, having difficulties to make that product available at that place. This also led to one more thing under the radar. So till pre-COVID, there were things called as just in time. Like nobody wanted to have any significant amount of inventory. Whatever the demand, you procure that and you sell it. Now what is happening? There is a demand, the product is not available. Like iPhone was not available. iWatch 7, when it was launched, it was not available for 3 months in India. There was so much demand. At the same time, there was cheap shortage and everything else. Like in the auto sector now, there are roughly around 5 to 7 lakh luxury cars are pending for delivery in India. Now people went for just in time to have some surplus inventory. It's like the demand is for 10, supply is not available for, supply is there for 5, and the guy who is actually intermediary who is selling it, he's saying that I need 20 cars because I know the demand is there. So people will be willing. So I am happy to put in 20 products order. So this led to a significant rise in the price itself. Raw input price is going up, demand is not coming down. And this led to an inflation target, inflation across the world going beyond the threshold limit of the central banks. Like US targets an inflation of around 2%. Substantially, they have always been very vocal about it. And that number went up to now today it's around 8.5% on a sequentially. It crossed 9 also. UK is again double digit number. Euro is again double digit number. India is closer to 6.5%, 7%. That's because a lot of our factors is 45 to 50% is driven by the food. Another 10% is the housing, which is the housing rate. So that might not be a true picture, but if your WPI, you look at it, which is the wholesale price index, that continues to be around 14-15%. So that inflation is a big problem. Now the inflation started hitting. Now the central banks initially, for 6 months, they're not very clear whether this inflation is transitory or this is going to be there forever. Then they realized around January 2022 to April 22, all central banks realized, now this is a problem statement. And if you don't control or kill the inflation, it will take away all the savings and it's going to create a lot of issues for the common man. So then they started targeting, and that's the only tool what you have to control inflation. What is the central bank they can do? You can either buy back, like the liquidity what you have put in the system, you take it back, which will create a lot of default issues, or you increase the rates in such a way at some point people will realize that. Now, anecdotally, let me tell you, across the globe, there is only one country which I can, give hard data. Brazil was sitting at an interest rate which was 3.5% a year back. Today it is at 11.5. Is there a sign of controlling the inflation? The answer is no. Inflation has not come down in Brazil. Brazil is into a mess now. Now, US decided to go for a very, 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 very aggressive rate hike. So today is again the FOMC. The Fed is going to decide what is the rate hike they're going to do. But that zero interest, which used to be there, they increase it to a corridor of 1.5 to 1.75% within a span of 3 months. And they also indicated a lot of liquidity, what they have printed, they will start buying back from September onwards. It's going to be a slow pace, but they will keep on buying it. Now, ECB, which is the European Central Bank, last week increased the rates by 50 basis points, first time in the last 11 years. Now, these are the things. What is happening is that gave an indication to the market, the interest rate is going to go up substantially. Now, interest rate goes up from 0 to the terminal growth rate, like in the next 2 years, Fed expects it to go back to 4%. So if the interest rate is nothing but the risk-free rate in the Gordon's formula, if you put it, it goes from 0 to 4%. What can you expect will happen to your cost of capital? Cost of capital now goes up by 5-6%. If your cost of capital goes up by 5-6%, and you are expecting your terminal growth rate is going to be a little bit slower than what it was initially, then there is a huge correction in the asset prices across the globe. That's the reason if you look at the global liquidity prices corrected roughly around 20%. Now, if I stick to my first point, the unlisted space, which is the which is basically your startup space. So they are running with a beta of 2 to 3 times. So you can expect if the listed space is getting corrected by 20%, what is the kind of correction which is expected for the startup space? So that can be anywhere between 40 to 60%. Now it is okay, people have taken that positive money knowing that it's a riskier asset. So now they have to, take that hit in their balance sheet. It's going to happen at some point of time. At the same time, there are stringent guidelines which are coming in. So that's the reason, if you look at it, there are problems in the startups. And let's be honest about it. If you look at Bangalore is supposed to be the startup hub of India. Last 2 months, this data is again available in the public. We have seen roughly around 20,000 layoffs across the startups. Like startups, how the culture, how it used to. I'm not saying specific startups. I'm saying startup as an industry. So they got the capital without realizing how they are going to utilize the manpower. They first have a tendency to recruit people. Once you recruit people, suddenly this market hits you. Again, when you need expenses, you dilute a portion of your company and you raise through that capital. Now the tap is choked. So people are very clear the funds that our cost of capital has gone up. Now we'll not be able to give you money. So what happens to the startups? Because startup model itself is a making loss. So they're burning cash. No startup is making money. They're burning cash. Most of the startups. If you're burning cash, at some point you need the liquidity. You need some investor to get in and put that money in a primary investment with you. So the startup market corrected substantially, and that happened predominantly across the globe. India, because we had seen this kind of supply. Imagine 700 to 71,000, 72,000 startups. Are all the startups are good? The answer is no. 1% is good, but the cost escalation is one of the factors now is going to play out in a big way for the startups. So if you look at, forget which are in the listed, all the startups which went for listing, they're okay. The market is going to determine what is the fair value of that, because it's demand and supply driven. So that will keep on happening. But the startups which are still were contemplating to list their shares, they are now in a big problem, because you don't know where the market is going, who is going to allocate them money. Like you look at this classic example of LIC, though LIC is not a startup. There was one-time deferment of their listing issue, so it kept on getting delayed, and finally it happened with a lot of turmoil. It happened, and then the stock price, post listing, what happened? It also gives one more signal. Once the company gets listed, you are no more in the shadow, you're in the limelight. Analyst will ask you questions. Analyst will ask you what is your bottom line. So people are in the double mind whether to go for the listing or not. So this kind of interest rate rise in the last 3 months, and also the unwinding, whatever the liquidity which has been printed and indication to buy it back, created a lot of problem for this startup space around it. And this, anecdotally, if you go back and you look at the .com era, lot of companies were being created which were online players. And there was an issue at that point of time also, whose valuation had just skyrocketed, and they had to correct it. There, a lot of companies were shut, a lot of issues happened, but eventually it kind of normalized. Now anything which I still stick to my first point, liquidity will always define the fundamentals. Fundamentals will never define the liquidity. As long as there are easy liquidity which is available at a cost of zero, all the startup, everything is hidden. But also the fundamental of credit risk is all of your risk are built when the things are going good. Nobody will be able to see what is the problem. Now suddenly people start realizing, now this money what we have put into it, there is an issue. Now this 100x valuation what we are expecting of a company, that we might not get. We might get, let's say, around probably 5x or 6x, and then we have put money into 10 companies, so we might lose the capital. So then it changes the periphery of the entire startup ecospace across the world. And I'll keep my discussions more related to the Indian side of it. So Indian side of it, if you're just looking at the Nifty today, Nifty is representation of 50 companies. If you go to the mid markets or the SMEs, they're in a big trouble, because of the cost of capital going up. It's going to create a lot of problems. So what can happen? What can theoretically happen? Theoretically, what can happen is definitely there will be a correction in the valuation, and there has to be consolidation. There has to be a consolidation between the startups. Like, there are, if one space there are 5, 6 companies which are operating, they might merge and they can, come back to it. How many of you watch that famous show Shark Tank? All right. So how many of you are inclined to do an startup? Raise your hands. Now what do you want to do? Again, you want to go and do a startup, or you want to rethink to an traditional line? Now what is the position? So you want to again start the startup or your own company, or you want to again have a traditional job? Okay, let me give you an example of a startup. So Bangalore, there are a few places which are known as the startup hubs. One is the HSR layout, Koramangala, where you go and you meet to the coffee shops. There will be a lot of entrepreneurs sitting chit-chatting about what is the idea they're going to implement around it. I'll not name, I'll speak about one startup which is an unicorn. It is valued at around $2.3 billion now. I met with the promoter and he says, for the freshers, engineering freshers, they recruit people by paying roughly around 50 lakhs salary. That's the amount what they pay, and then the salaries are substantially higher. If that's a company, will they ever be able to use their employees in a right way? The answer is wrong. At one point when the cost of capital goes higher, they will find it very, very difficult to raise the capital. So it will be very fast for them, so the valuation to come down. So that's an not an planned way of spending the money what you have got from your investors. It is a very unplanned or unstructured way of spending your money. Now, number two. So you have seen these gaming companies now, mushrooming, right? We have got our big daddies, let's say Dream 11, then there is MPL. So essentially, this company's business model is based on one fact, that playing with this is not actually gambling. It is you are utilizing your brain. Like Dream 11 today would be valued closer to $9 to $10 billion. MPL will be valued at around $2.5 billion. Now, this kind of valuations based on one single factor, risk. Like tomorrow, if Supreme Court says no, these are gambling as per the law is not allowed in India. So what happens to the valuation? So your entire valuation is based on one point, whether this is okay or not. Now, how many edtechs we have in this country today? We have got a lot of edtechs. We have got Byju's, Unacademy, Simply Learn. We have got many edtechs. What happens to the edtechs? So they again, there is a challenge which keeps on coming there. Then the fintech space of around it. People saw, and the maximum number of unicorns came from the fintech space, because fintechs, we have a large customer base. Like somebody is having an internet, you'll be able to install, let's say, phone pay or pay you, whatever it is. So it is very easy for you to do it, and you can also give a loan, you can do in consumer financing, all those things you can do it. But more or less all these companies are offering the similar kind of services. There is no differentiation in terms of the servicing what they're giving. I'll give you one more example. Let's take the example of Bajaj Finance. How many of you have used Bajaj Finance as an EMI proposition in India when you buy, let's say, a mobile phone? So how many of you, can you just raise your hands? I missed that. Roughly around 30% of you have used. So Bajaj Finance, when they came out with this model, so essentially when you're buying, let's say, a phone, the guy from you, let's say you're buying from a local store, the price is 10,000. He will not give any discount. If you buy EMI, the price is same. If you buy it one-time funding, then also price is same. He's not going to give you the discount. But if you take it from Bajaj Finance, what Bajaj Finance does is, boss, I'm going to give you at a zero cost, 0% EMI for next 12 to 24 months. And after 12, 24 months, again, you go and you give that mobile phone, you buy a new one. That's the model which contributes. So consumer finance book of Bajaj is roughly 70% is the mobile phone itself. Now, this is a completely unsecured book. But when the Bajaj entered into this market around 2011, 2012, initial years, they were making losses. But the big plan was very clear, which I'll tell you later on. So HDFC Bank was also there. They were charging 500 rupees as the processing fee and some charges. Bajaj was very clear. We're not going to charge any fee. And eventually, after 1 or 2 years, what happened? Every of these OEMs, let's say mobile phone maker, Apple or Samsung, they realized all these sales are coming through Bajaj. So Bajaj said then, look, if you give me money, subvention, like when I'm financing your product, then only I'm going to finance your products, or else I'm not going to do. So there are instances you will not get to know. Bajaj gets subvention up to 15%. Like he's financed, but you are buying a 100 rupees phone. Bajaj will get 15 rupees from the company itself. Let's say Samsung's mobile phone it is. Samsung will pay 15 rupees to the Bajaj. So effectively his loan becomes 85 and he's recovering that 15 rupees from you. Now, once that model was established, lot many players wanted to copy that. It's capital first, it's clicks capital. The entry barriers are so strong because you have so much a distribution network. It was impossible for you to penetrate it. And that's the reason, every fund manager you speak, Bajaj has got that kind of valuation, Bajaj Finance especially. So they're highly respected. And it's very easy today. You go and you open, let's say the best equity fund management houses, it's Mirae or Axis or DSP. You look at the fund managers, everybody would be holding a part of the Bajaj Finance in their portfolio. Why does it happen? Because they're doing something which is solving a bigger problem, which is bringing a radical change to the society itself. Basically, you are making a product affordable for a person whose salary is 10,000 and he is able to buy a mobile phone of 20,000. Jio solved the problem of making it affordable. Bajaj made the product which is beyond his salary affordable for that person. So 10 years back, this was something, I'm sure, you as a student will not be able to correlate, but sir, you as a teachers, I'm sure you would have seen this, 10, 15 years back, this was something which was never thought in Indian market. With the 10,000 salary, somebody who's buying a 20, 25,000 mobile phone. This was never heard. And that's the model which they brought it. Now, there are a lot of startups who are working around it, who are, working to bring these things to the forefront, which will bring the radical changes. A lot of people are working around the ESG side of it, which is environment, social, and governance, because we know that, we have to be more conscious individuals in terms of protecting the country. So a lot of people, startups are coming in the ESG space who are thinking about clean energy usage. Those startups are again going to do well because government will allow them to do better, because it's the prerogative of across the world to go for this climate summits or to move towards a carbon neutral side of it. Then number 3 startup is the healthcare side of it. So if you look at the Delta wave, when it happened in India, and unfortunately or fortunately, it exposed one of the biggest concern of India, the healthcare sector. And I'm sure all of you at least would have one person or the other who was affected badly during the Delta wave. Either the hospital beds were not available. A lot of startups are today working around it, how to solve that problem. And those startups will definitely, command a higher valuation around it. Like Practo today. Practo, you don't need to go to a hospital. You can, book an appointment. You can do an online consultation. They solve a bigger problem. So those valuation, will continue for them. So healthcare, again, positive. EdTech, negative. FinTech, I think, the crowding space around it, we have already seen, and then top of it. And from here on, there will be, correction, which is kind of expected to happen. With the rising cost of capital, the journey is going to be tough. But at the same time, as I said, during the difficult times, we have a tendency to miss the good signs. This is for the first times the startups across the country will realize the importance of money. Cash is king. They'll be very particular what is must have, what is good to have, and what can be avoided in terms of your cost structure. So that will prepare them for next, 10 or 15 years, next 10 decades, and the next 1 decade at least, how they're going to go about it. So the Indian market's resilience, because with the kind of opportunities what we have, though today the startup have faced with the difficulties, and this is the first time they're facing this kind of difficulties. The stock market is a sinusoidal curve. It goes up, comes down, again it forms a new high, again it forms a new high. So definitely, This will help the startups to have a radical expenditure structure, and it will strengthen the resilience of this startup structure. So there will be problem in the short run, but the long run looks stable. And one more thing I'll tell you, look, India historically has been an import driven economy. We are an agrarian economy. From an agrarian economy, we moved to a service driven economy. We somewhere skipped that manufacturing. So today our 50% of the people are dependent on the agriculture, which contributes around 10% of our GDP. So there a lot of problem lies. Now out of this 50%, if 25%, half of these people can be contributed to the brought to the manufacturing side through the PLI schemes and anything else. So that will again develop a lot of income generation source for them. So that's going to increase the idea. Again, startups are working around it, how to solve that problem. Then the last point is there is a concept, something called as biosimilars, like in medicine, which was patented in US at some point that gets stopped, and you try to replicate through a similar kind of, which is not exactly the same composition know-how. It's a different kind of composition, which is very similar to that. So that's an again industry which is going to thrive. So there again, a lot of people are going to work around it. So answer your question, somebody had asked me whether the startup story is over. No, the story is not over. It's just a slow pace what has happened. Probably it is the kind of period where you've got tough bowlers bowling at the batsmen, and the resilience will only be tested how well the startups can hold on to it. So that's the model, what will define the Indian startup system. So here I would like to pause and take any questions anybody want to ask.
Hello. Hello,
Yes.
sir.
Yes.
In your opinion, what is the most challenging in budgeting?
What is the most challenging in
Budgeting.
Oh, see, most challenging thing right now is the startup is that whatever the cash they have, how to manage that rationally. As I said, what are the things, what is must that cannot be avoided, that they can avoid. And then what is good to have, like what are the things which is good to spend, and what are the things which can be avoided, that can be avoided. And once the market opens up, then they can again raise the capital. And for the other startups who have not raised the capital, for them it makes sense to kind of wait and work on their ideas so that the model becomes so strong. Because here on, venture funds or the private equity will spend money on those companies who have a very, very strong business model. So they will definitely, get that advantage.
Good evening, sir.
Yeah.
So I'm Piyush. My question is India really heading towards stagflation? Because discussion on recession is a global highlight these days.
So look, recession, before stagflation, we have to get into recession. So no way India is getting into recession. It's US is going to get into recession, but that's an induced recession. India is not going to get into recession. So within this kind of young population, with this kind of purchasing power parity, and 56% of our GDP is private consumption, it is impossible to believe that India will get into recession. See, recession is nothing but negative growth for 2 quarters. That's not going to happen in India, for sure. And inflation, even if you look at it, let's say CPI, if you look at it, which is the benchmark what RBI sees it, last month there was a softening in the momentum of the inflation. So I am a little bit positive in the inflation side of it in India.
Okay. So
and regard to the prices in the petroleums and all, so that has started playing out well for the Indian economy. So
Yeah.
I don't see any, before the stagflation, the recession itself, I am not seeing it.
Yeah, hello. I would
Yes.
like to know, I don't understand economics much, but just out of curiosity, do you think this easy access to EMI nowadays that,
Hello?
do you think
I did not. Yeah.
do you think this easy access to EMI that we are all catered with is actually eating up our savings rate? See, at one point in your lecture, you said that a person who is earning 10,000 rupees, he's also aspiring to buy a mobile phone of 20,000, right? So what
Yes.
happens with personal savings rate? Very, 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 I don't know much about finance and economics.
No, definitely. So I'll give you just one statistics which will solve your question. See, So we look at a number which is called as household debt to GDP. 2016, the India household debt to GDP was around 10%. So today that is at around closer to 25% in the last 5 years. So is the 25% very high? There are economies which are sitting at 50-60%. So 25% is not that high, but 10 to 25% within a span of 6 years, that's very high. That's very fast. So that's a number which is alarming. So the point is very clear. Yes, lot of the consumption has been funded by the debt.
Yeah, but may I also add that all these developed countries have a habit of very strong systems of social support, right? Like
Yes.
health is taken care of, education is taken care of. But in
Yes.
a country like ours, where these support systems are a little bit on the missing and are not very easily reachable, do you think it is actually a detriment to the development of our economy?
See, a lot of your expenditure, is it funded by not only your present income, but your expected future income? If my expected future income matches the way I have expected, then it is not an issue. It is okay. Because we have a young population. We have got at least, our still 60% of your population is below or at around 30 years. So they have a long career path. So if they work in that way, definitely there will be not an issue. So to answer your question, if you look at it, social security, I cannot speak much about the education side of it. Education side, we have still seen, significant improvement. A lot of places like Delhi, you have seen, the public schools improved substantially. But at least on the other part of it, the insurance penetration is very good now in India. First time post-COVID, it's fantastic. Healthcare side, if you look at a company like, let's say, in the startup space, I missed it mentioning it. You look at this company, GoDigit. GoDigit today valued at $8 billion. And their penetration is superb. People are today willing to take an insurance. Like a behavioral change is happening is that typically an insurance is looked at as an investment product in India. But today, a young person is looking at term insurance as a measure of safety and not as a measure of investment. A healthcare, floater policy is again a must for him. So we are seeing that penetration to go up. So healthcare and life will definitely be a social security is what you're talking about, can be taken care by the insurance itself. In education, of course, safety is questionable. Still, I'll not get into it because that will go to a different angle altogether. See, why are you paying your public taxes? You are paying for 3-4 things. Public transportation, first is public safety, second is public health, third is public education, fourth is public transportation. Transportation, there are significant amount of work which is happening. If you look at NHA website, so there is a lot of good work happening in terms of the roads. So there is a lot of focus in terms of developing the infrastructure. So that is definitely happening. Safety, I'll not like to comment. Healthcare, again, I have said it, it's going to be very positive. So that's again happening. Education wise, we need a lot of educational institution, good educational institution. That is must.
Good evening, sir. Dheeraj
Yes.
this side. So, as you were talking about the startup ecosystem in India,
Yes.
apart from venture capitalist seed funding, there is a scheme called Stand Up India, which is an initiative by Government of India in 2019. So, sir, could you please give us a brief about it, sir?
See, Stand Up India, government is supporting, but I would not like to make a very, if you ask me, am I very, very positive about it? The answer is no. I'll give you just one company's name. Since it is in public domain, you can look at this company called as SKARN. You can type it. It's called as SKARN. SKARN is a company which is, there are articles written about, it is a threat to Google. And this is available in the public domain. They are doing extremely well, which has been actually funded by Stand Up India, startup ecosystem and everything is recognized. They need to build a cloud infrastructure somewhere else and they are struggling to raise money. So that summarizes my viewpoint around it. So at the end of the day, we need, public-private partnerships. We need incubators like the model what I spoke about Israel. So we need those things. See, we are a country of 1.4 billion people. So we need time to move. It cannot happen overnight. But yes, it is slowly, things are moving in the right direction.
Thank you, sir. Are we moving too fast on this, startup ecosystem, building that startup ecosystem in India? Like everybody has, government of India started Startup India, Stand Up India, then all these state governments have in a way followed them, and they have their own, funds to motivate the young minds of India so that they become the employers. So, are we going too fast? Or whether we are heading towards a new tech bubble, which will be something similar to, the tech bubble that happened in early 2000.
Sir, do we have an alternative? Are there, adequate government jobs which are available? The answer is no. Are we having, adequate private jobs available? Yes, the private sector is providing jobs and everything else. You will look, probably service sector adding a lot of jobs, but the other sectors are not. Today, service, our GDP में 55% composition is coming from the services sector. So IT companies are recruiting, the jobs are available there. But apart from that, there are other sectors which are not adding, that kind of job. So what can you do if you are faced with this situation? You need people to be entrepreneurs. People need to create companies. People to give, jobs. So that's the reason you saw this kind of lot of supply of the, startups which happen. A lot of thrust was given. But sometimes if we run very fast, like we run the Tour de France with an Atlas cycle, we'll not win the race. Our cycle will break. And then we realize we need a different kind of cycle to maintain that kind of speed. And that's what is happening right now. So its market is going to take care of itself. Some rationalization is very evident, and that will happen. Like to give an example, Paytm has this payments bank. Since it is again in public news, RBI has now stopped the operation of the Paytm's bank. The audits are going on.
Fine, thank you. Any other question?
Yeah. So, good evening, sir. My name is Shreyank Jaiswal. My question is, since inflation affects the investment decision of a company as well as individual, so is it okay to, or is it a good decision to invest in government bonds during the inflation period?
See, if the inflation is going high, okay.
Yes, sir.
Inflation is linked to interest rate. If the inflation is going high, what the central bank can do? They can increase the interest rate. If the interest rate increases, what you need to do? You need to reduce your duration. You will go ahead and you'll read this concept probably at some point. We have a concept called as macula's duration, and we have a concept called as modified duration. In a very simple terms, if I'm invested for a 10-year bond, the interest rate and the modified duration for that is around, let's say, 6 or 7 years. 1% interest rate goes up, my bond price comes down from 100 to 93 rupees. To avoid this problem, what we need to do is that we need to adjust our portfolio and go for a lower duration papers. Like we can invest something in the three months kind of paper, or let's say up to 1 month or overnight. We basically maintain the cash so that we do not lose our money when the interest rate goes up, because interest rate and the price of the bond are inversely correlated. So we need to be very particular in terms of reducing our duration. It's like we'll not invest in a longer tenor papers, we'll invest in the shorter tenor papers. Now the second part, as an investment guy, if I'm bringing the same thing to the equity market, actually equity market is very clear when the interest rate goes up. Fortunately or unfortunately, if you do an anecdotal, if you do an empirical study around it, you will find a lot of correlation. Interest rate goes up, equity market also goes up, because people believe why the interest rate is going up, because inflation is there, demand is there. For that reason, the revenue of the companies are expected to go up. So that's a kind of valuation game which again happens. So for an equity market, you have to be look at other factors. For bond side, it is a no-brainer that you invest in the shorter tenor of the paper so that you are protected of any kind of interest rate fluctuation.
So, sir, short investment decisions will be good during inflation. Short
Yes.
investment.
When the interest rate is going up, it is good to preserve your money. Look for instruments which are, there is no mark-to-market effect. Like you can go for an FD, which are liquid. You can look for overnight instruments. You can look for short-term instruments. You can look for arbitrage funds. These are the instruments, but you can look at it.
Thank you, sir. Thank you so much.
Hello, sir.
Yes.
Good evening, sir. This is Swajal. Sir, my question is, what's your greatest strength as a chief investment officer?
See, I cannot say my greatest strength. My strength is willing to listen and accept what the perspective of the other person is saying to you. Do not go by an, prejudice patriarchy. Like I believe something and I cannot hold on to that view. I need to listen and take actions as per what the market says it to me. So I'm nimble footed. So basically I'm flexible to accept somebody's view. So many times what happens now, we come from a prejudice and we believe that this is right. Like I was giving this example. One of the persons in our team, he always believed that Rani Gayatri Devi is from Jaipur. Can you guess where Rani Gayatri Devi belong to? Where is she actually from? Any guesses? Yes?
Yeah, she belongs to a royal family of Kuch Bihar, I think.
Yes, she's from Kuch Bihar, which is in West Bengal.
Yeah.
Now, if you speak to a Rajasthani boy, no, Rani Gayatri Devi is not from Rajasthan. She is from Kuch Bihar, which is in West Bengal. You will have difficulty to accept that prejudice thought. So like that, many times we read something like we believe interest rate going up, it will correct the equity prices. If I just stick to my view, then my willingness to learn becomes very limited. So I need to be open to accept somebody's view and form strategies accordingly. In your life also, you have to be humble to accept others' views. So being a good speaker is important, but it is more important to be a good listener. And you look at all the great investors, they're always good listeners. Any further question?
Good evening, sir. My question is Indian rupee is trading at all-time low compared to US dollar.
Yes.
What do you think for long-term view? Is it going to revive or is it going to lower than today?
See, rupee has always been a depreciating currency. See, we have a theory called as interest rate parity theory. Whose interest rate is higher, that currency is going to depreciate in the long run. India is a developing country. US is a developed nation. So US interest rate is always lower than that of the India. So because India's inflation is again higher than that of the US. Interest rate is deriving out of it. So it is definitely a depreciating currency. Now, a sharp depreciation, like we have an interest rate differential of let's say 4-5%, which is the forward premium. As long as rupee depreciate by that 5%, it will not pinch anybody else. But if it is going beyond that, like rupee goes to 85, 86, then your imported inflation, because we are in predominantly import driven economy, our oil bill is significantly higher, then inflation is going to start hitting us. So we need to be particular about it. But at the second thing, with this PLI schemes and everything else, we are eyeing for exports. And if you want to be an export driven economy, what do we want? We want our currency to depreciate so that we can have higher realization values. The game what China played very long. So if you go back and you look at it, China did two things. One, their cost of labor was low and they were hugely exporting. So they devalued their currency into some extent. They always intervene. In fact, they were labeled as a currency manipulators. so that they can take maximum benefit. Like if we are expecting, imagine $100, rupees 80, we'll get 8,000 rupees, rupees 90, we'll get 9,000 rupees. So which is preferable to you? You expect 10 rupee depreciation, right? A depreciated rupee will help you. So with all this focus and everything else, and some amount of depreciation, because Indian government is focusing on the rupee, on the exports, and depreciation is okay. So if you ask me my view, so this year I see rupee by March depreciating up to 81.5 to 82 rupees, which is a fair thing to happen. Because if you compare the other currencies, the way they have depreciated against rupee, again depreciated against US dollar, that's still worse than that of the India.
Hello,
Like,
sir.
yeah, please go on.
Good evening, sir. My name is Abhishek, and my question is: recently, I heard a news about Wipro engaged for 5 years with a Nokia. So I just want to know Wipro, in which sector the Wipro helps in a Nokia, sir?
No, it is definitely on the networking sector, but I would not like to comment about the deal much, because since it is available in the public domain, you can, read it.
I think we are done with the questions. Any other questions? No? Okay, fine. So
Just, one thing I kept it for the
Please.
last. See, there is a lot of buzz about this Bitcoin and everything else,
Yes.
which is nothing but the cryptocurrencies. So look, there are two things. One is the blockchain, which is a technology on which the crypto is running. Crypto is nothing but, privately unregulated currency. If you ask any central bank, would they like to lose their power? The answer is no. So that's the reason, if you will see, as you keep on going ahead, there will be CBDCs, which will keep on coming, like the central bank digital currencies. RBI is talking about it, rupee in digital form. China already has it. So if you want to import anything else today with China, you can do through the CBDCs. Only thing is that you have to provide everything else, including your blood sample reports. So that's the kind of information what Chinese government needs from you, but that is possible. So my view is that as we keep on moving, there will be, central bank digital currencies which will keep on coming in a large way, which will be in a regulated fashion, and no central bank would like to lose their power. So I'm very negative on the cryptos and the privately regulated currencies. I'm very positive on the CBDCs. So that's the last point. So all the startups in that space, I'm negative on the valuation part of it.
Thank you. Thank you very much. Thank you very much for your insights on the startup ecosystem. And we are also very thankful to you that you have accepted our invitation and spared your valuable time with us. In future also, we'll expect that you may, spare some time with our students so that they can get insights from, some specialized human resources like you. And thanks to Santoshji who roped into you. Thank you very much once again. Thank you for your insights. Thank you.
Thank you, sir. And thank you, Santosh Bhai. I also fondly call him Santosh Bhai. Thanks for inviting me.
Yeah, let's have a standing ovations for the distinguished speaker.